guys, welcome back to another market breakdown video. I hope all of you are having a fantastic week so far. Today is Thursday, the 5th of December, and we really only have about 2 weeks left of trading for the whole year. So we've got to make the most of it, stay alert, not lose momentum as we approach Christmas and the festive periods. There are still lots of opportunities out there, and we need to obviously finish the year strong and capitalize from all of those moves and opportunities. So we've obviously seen a lot of volatility from the start of the month, which has been fantastic. And as always, we'll start off with the DXY. Now, you can see here that this is very, very bearish. We've had this nice impulsive leg following from this key area of interest. Now, I highlighted last week and the week before that and the week before that this really was make or break. So from this region here was really make or break. Now you can see that we were discreetly making these high highs into high lows, and then when we arrived at 98.45, we really stalled around this level, and this candlestick here really indicated that there was going to be some potential downside movement. So as I previously mentioned, I was just treating this whole piece of price action one large retracement, one large correction, following from this very impulsive move here. So what we can see here is a lot of momentum to the downside, and having rejected this very interesting area here where it was sort of make or break for the DXY. And what I mean by that is if we saw a continuation to the upside and we had breached this level here, then price was simply going to naturally continue making high highs and high lows. But we didn't do that, and we saw this very nice bearish price action to the downside. So where does the DXY go from here? Well, I think it's highly probable that we actually interact with 97.15. We can see that this is a very, very important level for the DXY, and it's either going to be a break or a bounce scenario from here. So, we could essentially come down, create this triple bottom, and then see a bounce, some form of a retracement, and then we go from here. Or alternatively, what we actually do is breach this level, retest it, and then continue moving to the downside. So based on both of those scenarios, obviously you can see that I'm only bearish on this. I'm only going to be looking for reasons to sell the US dollar and use this correlation in conjunction with other dollar-related major currency pairs. So, the analysis is playing out really nicely. You can see that we've broken this counter trend line. We're now below the daily 50. So there are many indicators to suggest this is only going one way, and that is south. So if we have a look at the US dollar basket, this has developed a little bit faster than the DXY, and we are now interacting with a major level of interest, this very interesting level of support and resistance. So, again, we could break or bounce from here, as I've highlighted for the DXY. But it's a very, very similar situation. You can see that the price action is noticeably similar. So we had this impulse followed by this correction, and then this looks like the start of the impulsive phase. You can see that this price action is noticeably more impulsive. There's a lot more momentum just in this last few days alone. So again, this is looking really promising for downside, and I would just be waiting to see whether or not we break or bounce from this region here. So again, we can correlate this with other dollar-related currency pairs. And if we start by looking at Euro USD, having rejected this key level here, psychological level 1.100, and this kind of double rejection of the 61.8%, failure to make a new low, we've since broken to the upside very impulsively. We're now back above the daily 50. We've broken above this descending trend line, which I've just drawn in for a potential area of dynamic resistance, but we've actually burst through it. We've had a couple of days of indecision consolidation here, and I'm going to be very interested to see how this daily candle closes, because as you can see, we've not really had a full body candle closure above this level for the last couple of weeks. So if this daily candle does close with a full body above this level, which is quite a strong level of support and resistance, then that will indicate that the bulls are in control and that we could in fact fill this white space here. Now, this white space is essentially the same white space that we have from here to here. So again, this is looking very, very bearish. It's looking like there's enough momentum to continue pushing this to the downside, and therefore if we correlate that with Euro USD, we can see that there could be enough momentum to push this to the upside as well, and certainly fill this white space, interact with these previous highs here. And then if we do finally arrive at these highs here, we need to see how price action is developing and whether or not there is a setup to continue taking this higher. But the fact is we've failed to make a new low. We've had this double bottom rejection of psychological level 1.100. And price action is looking very impulsive indeed. So if we just have a quick look at the 4 hour. So I highlighted at the beginning of the week how similar this price action was as we approach this key level again. We had this very, very similar descending nature of this correction into this psychological level, into this area of value, and then we had this explosive move to the upside. So, this was forecasted. I know quite a few people caught this move, which is fantastic. And as you can see, price is just consolidating now in this kind of correction. So, as I mentioned, I just want to see how the daily candle closes, because that would be quite important as we haven't had a full body closure above this region here. So keep an eye on this pair. I still think there's a lot of upside potential, and depending on how price action unfolds and how this correction develops, there may be a scaling opportunity for one day next week. I wouldn't advise jumping into any dollar positions tomorrow as we have NFP. So this could be one for next week, but I'm really favoring further upside for this pair. So US dollar Swiss franc, I covered this Friday and I mentioned about this daily candle closure here. Now, if you have a look at the previous video, when I was doing the breakdown, the current daily candle was actually looking like a bullish engulfing. And I said that I would be very surprised if this did actually close as a bullish engulfing. And I said that it was probably highly likely that we would see a high test wick and we would reject this level. Now, that was based on the fact that this key level 1.00 is such a significant level of liquidity for this pair, and also just based on the nature of this price action. So, we can see here that this whole move is very impulsive, and this was just one large correction. So when we were approaching this area of interest for this third touch of this ascending trend line into this area of high value, it was only natural to expect some form of a reaction. So when this daily candle closed in the form of like a shooting star, that was suggesting that the bears are defending this area very well. And based on this pattern development, and we did have a little fake out move here. And then, of course, we had this very heavy retracement candle here, followed by this mini correction. And then, bang, price melted to the downside. So as I say, we are just creating this kind of mini correction at the bottom of this impulse here. And we may just see this kind of develop for a few more hours, and then it could potentially go from here as well. Now, we can't rule out a deeper retracement. We're quite far away from the 4-hour 50, but looking at the price action here, it does look like it's really struggling around this level, and we've come back up to retest the 61.8% taken from A to B. So there could be a scaling opportunity at this particular level here. So again, drop down to the lower time frames. And for those of you that are involved in the community, apply the strategy, stick to your rules, and trade what you see. So I'm only looking for reasons to sell this currency pair at the moment. I still think there's a lot of downside. We do have this structure point here, which is a major structure point for this pair, which sort of aligns with the minus 27% as well. So that could be a nice little downside target. So again, keep this on your watch list. Okay, so US dollar CAD finally broke out to the downside. Patience certainly pays, especially with this pair. As I highlighted last week, we do see large impulsive moves followed by long periods of consolidation. So, based on the historical data with this pair, it's only natural to expect that when we do correct and when we do consolidate, we've got to be patient with it. Now, price was really struggling around 1.3300, and there was two scenarios that I highlighted. The first one, and the most probable one, was that we actually saw price roll over from this region, which it's done. And the second scenario was that we actually broke above this level here, got people caught on the wrong side of the market, if you like, and drove price up into 1.3340, 1.3350, and then potentially roll over from here. Now, we had the Bank of Canada interest rates yesterday. Obviously, they were very hawkish. They're one of the most, if not the most bullish economy out there at the moment. And it's clear to see that this whole move is very, very impulsive. So I think there's a lot of downside potential still. What we do have to be aware of, though, is if we fib from A to B, we are approaching the golden pocket. Now, we also have this level of structure. So we have the structure point here, which is in alignment with the golden pocket as well. So, we may get a reaction around 1.3150, 1.3140 around here. So this could be a nice little profit taking target. Now, if we just drop down to the 4 hour, looking at this on the 4 hour, you can see that price was just stuck in this wedge formation. So it was just getting squeezed, and it was only natural to expect a breakout. So we actually entered on the 1 hour around here last week. So we were experiencing drawdown, which is fine. We'd already calculated the risk, and the stop loss placement had been carefully considered as well. So this is now running around sort of almost 3%, which is cool. So we'll let that run. And as I say, we just got to be mindful of that area of confluence that we're slowly approaching at the moment. So you've just got to have a very neutral mindset at all times and just be prepared for all scenarios. So that's dollar CAD. So USD JPY. This was a fantastic trade, really, really nice trade. So we had this one last drive higher following from this bounce of the daily 50 and the trend line, quite an impulsive move higher. And then 2 days of indecision. So we had these multiple spinning top candles, which, one of my favorite candlestick formations. When we see spinning tops or dojis within an area of high value, that is telling us that the market is decelerating. It's telling us that there could be a change in direction. And so when we've identified an area of interest, an area of value, and we see those candles of indecision, there is a high probability that price could reverse from that level, which we saw here. So, as we were approaching this descending trend line, as we were approaching 109.50 in the form of a rising wedge formation, which most of you know is a bearish reversal pattern, price action was giving us all of the signs that there could be a potential reversal. And if we correlated that against all of the other dollar related currency pairs and the DXY and the US dollar basket, everything was lining up. Yeah, everything was lining up for a beautiful reversal. So a lot of people capitalized from this move, which was fantastic. If we just have a look at this on the 4 hour, so you can see that this whole piece of price action here was in fact the 2 daily spinning top candles. And you can notice the ascending nature of this price action. So for those of you that understand patterns, this indicates a potential reversal. When we see ascending nature, it's likely price is going to break out to the downside. When we see descending nature like this, it's likely that price is going to break out to the upside. So there is a setup here at the moment. Now you can see that price has retraced back up into the 4-hour 50, the 38.2, retested this trend line, and you can see that price is currently printing this very nice bearish engulfing candlestick. So those of you that want to scale in, this is your first opportunity. There's multiple confluences here to take a short position. The only negative is that price has rejected the daily 50. So it's possible that we could actually pop a little bit higher. And if we did, and we created a new lower high, that would be the confirmation of a firm change in direction on a daily time frame. So that's the only thing that sort of goes against this trade, really. But other than that, the pattern development is fantastic. I love this impulsive move from this area of value up here. And yeah, it could be a nice little scaling opportunity, as I've highlighted on the 4-hour. So this is pound CAD, and this is another pair that's definitely on my watch list. The daily time frame is looking very, very appealing indeed. And as you can see, we've now retraced into an area of value. Now, I've taken a fib from A to B, and we've currently rejected the 78.6. We're also within psychological key level 1.7300. And you can see that we've also got this descending trend line, which price has rejected as well. So there's 3 major confluences here. Plus, in addition to that, we also have this rising wedge formation again. So Aussie dollar, US dollar, quite simple really. I did mention last week that I was expecting a break to the upside, which we had. Following from this falling wedge formation here, price was getting noticeably squeezed into an area of value. We highlighted that this area around here was the golden pocket on a larger fib, and we since saw this impulsive breakout. Now, price is looking very corrective here, and what I would expect is if we can just see price retrace into the 4-hour 50, the 50% in this level of support, then I would be looking for long positions around here. So this is Euro CAD. We've taken 2 positions on this pair over the last few days. So our first position was taken from around here, with our stop loss just below these lows, targeting the previous highs. We closed the position around here, which banked us a nice 120 pips, 2.5%. And our second position was taken from around here. Our stop loss was 4,750, so there, came pretty close to stopping us out. And then we closed the position around here as well. So banking 100 pips and just over 2%. So 2 trades there, less than 3 days, banking over 4.5%. So fantastic. So this is Euro Aussie on the daily time frame, and we took a short position on this pair yesterday. And basically, I'll just run you through why we took that position. Now, you can see that price created this double bottom here, and we had this retracement back up into the fib golden pocket, and also this level of structure here, which just so happened to be psychological level 1.6300. Now, you can see that we have multiple days of consolidation. We are forming this correction here, and when we broke out of this consolidation yesterday, that confirmed to me that price had broken the structure and that there was going to be a high probability of a continuation to the downside. So if we drop down to the 4-hour, so you can see that this highlighted box here was acting as quite a strong level of support for this pair. We have multiple days of consolidation, effectively range bound, and then we broke out of this consolidation and we came up for a retest. Now, we broke a little bit higher than the structure point here, but we came no higher than the 61.8%, and price closed below the 4-hour 50 EMA. So we had a body closure below the 4-hour 50 EMA, and we then took a short position from around here. Stop loss was just above these highs here, and we were targeting 1.6000, which is down here, this previous structure point. So let's take a look at Kiwi CAD. Now we can see that price is in a bullish sequence, making high highs into high lows. So if we drop down to the 4-hour time frame, overall, the Kiwi is looking very bullish, guys. So the only thing that goes against this setup is my views on GBP CAD, and of course USD CAD is also looking very bearish as well, not to mention US oil. So for this setup to work, we need an extremely bullish New Zealand dollar over the CAD, but I'm liking what I see from a technical standpoint. So, we obviously have to keep a neutral mindset, as I've already highlighted. And if that Canadian dollar momentum really decelerates, then this setup could potentially work. So US 30, I've covered this indice a few times now, and I hope a few of you managed to catch a short position, as I've been calling this for a few weeks now. So as you can see, we've had a very impulsive move following from this rejection of this outer structure, and we've now rejected the daily 50 EMA. So if we have a look at this on the 4-hour, so you can see that we have broken below this level of structure, and it does look like we are now retesting this zone. Now this is the previous low, which price has broken below, and we do have a mini fib move taken from A to B. So price is well within the golden pocket, and it's currently rejecting the 78.6, but it hasn't quite fulfilled the rejection of the 4-hour 50, which isn't a problem. Price doesn't have to come up to the 4-hour 50. But you can see this level was previous resistance, which is now support, and it's currently capping price quite nicely. So, if we do get a nice 4-hour bearish closure like this, then that could be a really nice candlestick to take a short position. So that is a very, very healthy risk reward there. So definitely keep an eye on this. That goes for the Nasdaq, that goes for the S&P as well. They're all in prime areas for shorts. There's a few other pairs that are on my watch list as well that aren't quite in key areas. They're still developing. So tomorrow's Friday. It's also NFP day as well. I never really like to trade on Fridays despite being NFP. So I think as a community, for the positions that we're running, we'll manage them accordingly. If we do see any 10 out of 10 prime setups that are too good to miss, then obviously simply trade your plan. Don't deviate from that. But just be mindful that we do have NFP tomorrow. And of course, we have all of next week, which should be a really great trading week to end the year strong. So hopefully you found this video valuable, guys. There are some really decent setups, in particular the US dollar pairs. And I really like pound CAD just from where it's currently situated. It's in a prime area of execution, and just in the way that price action has developed into that area of value. So enjoy the rest of your day, trade safe, and I'll catch up with you soon.